Good morning, everyone. Hope you're all doing well and that you had a good weekend. First of all, this week and today, and this week's in the morning, instead of just the morning analysis, I'm going to start introducing the new content to you. Well, it's not really the new content, but just the course version. So let's say DW 2.0 or 2.1, I don't know exactly what we would call it, but basically it's just going to be me running through my more detailed trading plan and how I currently trade. I'll be taking away the things that I don't use anymore, and I'll be showing you the things that I actually do use. And that is very important because that will bring you up to speed and you'll all be on the same page. But also it might be a bit more confusing and advanced to anyone else that's just starting with trading. But I do believe that if you look at this and you apply this, you could be really successful in it, and it can make things clear for you. So I'm going to start this week's analysis on the weekly. So the first video is just my top-down analysis and how I determine the trend or the direction or whether I'm taking buys or sells. And it has all to do with 2 points, point A and point B. So when we look at a chart and we look at a move, we always have 2 points. We always take a trade from a point A to a point B. There we have our point A, and then we're looking to go and find point B. So that is the bullish example when we are taking longs, and then we also have the same thing for the bearish example, where we have price moving down from point A, which is then at the top, to point B. This is just now a line drawn, but in essence we can see multiple impulse and corrective moves in this sequence. We can see price moving like this all the way down, and the same thing for the bullish example. This doesn't need to be, so here again we can have a point A and a point B, and again we can have a point A and a point B. It's not A, B, C. I'm going to explain to you why. And again, point A and point B. The same for the bearish example. Now the difference is the time frames. So this could be our, let's say, our 4-hour time frame. Let's say our daily time frame, where we have a point A and a point B. And then on the 1 hour, we can have various A, B, A, B, A, B. I'm not calling it CD because I'm looking each day for an origin point, which would be point A. And that origin point needs to align with a few things. And we'll get that when we get to the 1 hour time frame. So just keep this in mind, and this is something important that you just need to remember. I'm not going to delete it, but I'm just going to make it a group and just hide it. Okay, so we're on the weekly. So weekly, we just need to identify point A and point B. Where did we react from? Where are we going? So where was point A? Did we maybe react from somewhere? And where is point B? So for instance, this could have been a point A. Let's type that in again, point A, creating a high. So our point A's always need to refer back to liquidity. So there we have an old high, we swept the old high, so that is our point A. Where was our point B? Well, our point B was down these lows. That would have been then point B, and that is then our AB movement from there to there. So that was the move towards the downside. That was our AB movement. And you'll see then, for instance, on the 1 hour, this was the weekly now, you can see there were many AB movements. A, B, A, B, A, B, A, B. I know you're all used to A, B, C, D, but the reason I'm using A, B is a start and a finish point for each day. So it's not a equal movement or something like that. It's just a starting point and a finishing point. That's all. That's the only reason I'm using an A and a B, because it's A and B. And we see B ending down here again. So we can see within that leg towards the downside, there were many A, B, C, D, A, B, A, B movements. So now potentially this could have been now turned into point A. We swept the liquidity. So where are we heading to next? Well, we have that previous high over there. We have the imbalance over there as well. And we also potentially had something within this range over here on the lower time frame. So potentially we could have already created the B. So B could be there. So we are now looking to see where price could be heading. So this is now A. Are we heading just into this area or heading up higher? We're not sure exactly yet. But so we can see price did create a nice reaction around this area. So possibly on the daily or the lower time frames. Let's just look at the daily. Why is it all gone now? Weekly, daily. It's not showing on the daily. Let me just quickly fix that. Okay, I think it's sorted out now. Let's look at the daily now. So here we can see that we had an order block up here in the daily, and price reacted from that order block. So potentially this then was point A that we created over here, and this was then point B that we created over there. And you'll see why I do believe this is the case in the next, on the daily time frame. So this is then point A. So point A, B is then also the next point A. So that is then point A, and then we are then trading towards point B. Where will point B be? So that is now where we will go into the relatively new stuff. So all of this I think you're all familiar with, just directional bars. So potentially this is point B, and we need to find where it's going to end. On the daily or on a 4-hour, it doesn't really matter. We need to look at 20 days, the last 20 days, last 20 trading days. So you won't be able to see it now, but I have my calendar open. So basically we then can look at the last, wait, I'm going to open the calendar on the screen so that you can see. Okay, so here we have the calendar in front of us. We need to look at the last 20 trading days. So we count back. We don't include Sunday, so we take Friday 1. So the 13th is our first trading day. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. 11, 12, 13, 14, 15, 16, 17, 18, 19, 20. So the 19th of July is then our date. If we then go back, we look at the 19th of July. Over there, we place our horizontal line, and we just look at this and we just lock that. So this is now the price action that I'm concerned with, the last 20 days of price action. Within those last 20 days, you can do this on the follower. I need to identify the highest high and the lowest low. And that is over here and over there. So there we have our highest high and we have our highest low. So this is then the range that we're currently trading within. All of this. This is the low, this is the high, and this is the range that we're trading within. Now I need to identify where are we in terms of premium and discount, and where are we heading to. So we can see that this is the impulse leg, and we're currently still in the premium range. You can see, let's just put some color quickly on this thing just so that you are all there. Let's just put some color there. Just like this for now. So we are in the premium and the discount. We can see that price is in the premium, and we're always looking for price to move from a premium to a discount. So on our range, on the range that we're working within, the range that has been dealt, and we see the low and the high, we're moving from the premium to the discount. So I need to identify where are the areas in those areas in that region where we can react from. So now I'm looking for order blocks. We have one over there. It's also a range that needs to be mitigated, and we have that old low as well. So now I can know that from last week my bias was bearish, looking for bearish moves as our pro trend trades, looking for price to go lower. Just a disclaimer, price doesn't need to go there. It's not guaranteed that it is going to go there. All that it's saying is that price can potentially, there's an edge to it. There's an edge towards price going and moving towards the downside. Sorry. So now we know more or less what is our higher time frame direction. We know that we want to see price moving bearish, and then we want to see a reaction. So let me just get this clear. So as we move along, we need to identify where price can react from. So we can start. So on the daily, we did the 20-day, the look back. We saw our range. We excluded the Sundays. We marked out the high and the low, which is then our range that we're trading within. And this is our current range. We look at the premium and the discount. We see, are we in a premium, and we need to be moving to a discount. Then we need to identify the liquidity points. Where are they, and where is price going or reaching for? Keeping in mind the weekly range as well. So on here we can see we have a 4-hour order block. We'll just call it supply. We have a 4-hour order block there. We reacted off of there. We did break structure towards the downside, so we have our structure break there as well. It was a Friday move towards the upside, so I'm not too bothered by the impulsiveness of these candles. As long as we stay below this order block, I'm still bearish. I'm still moving short. So our 4-hour, we have now our point A on the 4-hour. You can see we're getting closer and closer to the 1-hour, to the intraday charts where we want to see price moving. So we have now a point A. We're not yet sure where point B is going to be. Well, we need to look at liquidity. Where's our liquidity point? So we can see there is liquidity on the, let's create a new one, point A. So there we have liquidity below that low. We also have liquidity at this 4-hour order block. Not really a break structure, but we can maybe count this as an order block. So we can see on the 4-hour we have reason to go lower into this area, even if it's just to take the long, the short, and then take a long and possibly back or break this area if we're not going to go lower. So there's definitely reason for price to move down lower, either to break this area or to react off of this area and go higher. So there's liquidity. And then obviously we have the pull of this order block down here below, as well as this old previous low. So now you can see how we are channeling the higher time frame and the bigger picture down to the lower time frame and the 4-hour and the intraday charts. So now we have our point A. Now we need to look and see if we can go to a point B, which can potentially be this area. I'm not saying it's going to be, but it's can potentially be this area. That would definitely be a take profit area. And A, like B over here, or it can be lower, or it could even be lower, filling all of this imbalance over here, because it's in line with, remember, we're just working within our 20-day range. That's all that we're working in. That's all. We're not concerned about the rest, the previous. We're just looking at the last 20 days, and that's all that we need to be concerned about from an intraday day trading perspective. It's not going to help us looking at the last 40, 60, 80, 20, 100, 120 days. It's not going to It's not going to make any sense to us. So we're in this area now. So now we can drop down to the 1 hour and identify the next steps. And this is the 1 hour is then where the real stuff happens, and that is then where we ideally get our trades from. So here we are on the 1 hour. So I'm just going to quickly, we have this level over here. Just going to quickly turn on the 1 hour goodies. Okay, so here we have the 1 hour chart and we have our days marked out. We have our most recent liquidity points marked out. We have our imbalances marked out and everything in that degree. So this is then the source. This is then the rules, the key elements, the patient requiring elements, aspects that we need to see, or the things that we need to have present in our day at any given point. And this will help you to trade less over trading, and help you to to choose the right option to get only higher probability trades. This is then the main ingredient. Okay, so we have point A in here, and this would be then just a order block. So we can see that we have also an order block over there on the 1 hour. Over there, let's just make quickly a gray color. You can see we have the order block there as well. But let's run through let's run through this. Different liquidity points on the 1 hour, which could be point A. We have an order block plus imbalance. So you all know what that is. We can quickly just draw them out, and then everyone's on the same page. So our first option is where we have an order block, which is there, and then we were looking for price to come back towards the upside. Then we also have an order block, but we have imbalance below it, and an order block, and looking for price to fill the imbalance, tap into the order block, and then continue down lower. Then we also have an order block. We have price creating an old high, and then we see price coming back towards the order block, probably imbalance there as well, and then go low. So we have our old high or low, imbalance, order block, and we're looking for the trade execution over there. Remember, this is for the 1 hour, but it also is rules for our entries on the lower time frame. So keep that in mind. It's the same for entries. So that is then the number 3. Remember, there can also be just an order block and previous high and low. Doesn't have to be imbalance as well, but otherwise we're going to write a lot of things down. Then obviously we also have just the imbalance, where price creates imbalance, and we have it over there. Oh man. Sorry about that. Imbalance. And then we see price trading back to it. Sorry, and then go lower. And we can also see price create a previous high. We have a high, and then price sweeps the high into the imbalance and down below, where we sweep the imbalance, and then also imbalance, previous high, low, and then also just a previous high. So we have a high, we sweep the high, and we go down lower. Or we have a low, we sweep the low, we go down up higher. So I'm giving you this, but I'm not going to give you any schematics or sketches. You need to go look for those examples yourself. You need to do the work and make your own sketches. You can ask me then if it's correct, but do it yourself, please. I'm not going to give you it and then take away the pleasure of doing it yourself. So here we have our 4 hour order block. So this is the current analysis. Now we also need to notice that we have an impulse leg over here, but this impulse leg didn't break any structure. So for me, it's more a retracement leg. And now we're seeing the move down lower again. So now I need to look for liquidity points. So where can I take a trade? So I have between this line and more or less this line, to take a trade, to see the day expanding and making a move. So something is going to happen in between these lines. We're going to either have see price moving sideways, or we're going to see price moving down and up and down, or we're going to see price just making a small pullback and then continuing down lower. There's various things that can happen between these two lines. Remember, we still keep in mind everything that we've done from the weekly, the daily, the 4-hour. We know our ranges, we know the range that we're moving in the last 20 days. Now we're on the 1-hour. We have in mind, you can make your own notes and say that we are bearish, bullish, or whatever. But I know now that I'm looking for shorts mostly, until proven otherwise, until this level, until these areas has been violated and we can go higher. But for now, I am looking for shorts. Okay, we have now this impulse leg, so I have this impulse leg marked. We're probably going to move towards the discount, that area. So we have an imbalance over here. We have an old order block over there. We have an old low over here. Moving there, we have a small range over there, which could be an order block to go short from. We have this trend line liquidity, and we have these highs over here. So now I need to see price reaching any of these areas, ideally the ones above here, to take a short from, and the ones below, if I am to take a long from. So currently this area, this old high, this old high, and this old high can be areas to take a short from. In the next video, we'll discuss the 15-minute time frame. How do we align price, time of day, and price action along with these points when we look for entries? So for today, our analysis further is that looking for price to reach up into one of these areas or create a new 1-hour order block as we move down, because we now have point A. We're reaching for point B. Potentially this could be point B. That's the first point B option for me. It's because it's in the discounted area, and it is an imbalance area. So that for me is the first point B. Point B can then move on lower and lower and lower, but that is first point B. So we have point A, we need to find point B now. We can now remember where we have point A and point B, and within point A and B we can have smaller point A, B, A, B, A, B. So we have now just point A there. We can now look for a second point A, or a second point A that we originate from and move down lower. I hope it makes sense. I do believe it does. If it doesn't, please hit me a message and we'll discuss it. So this is then the first video in top-down analysis. The next one will be then according with 15-minute time frame, where we look at the Asian range, we look at the manipulation, and we look at lower time frame liquidity sweeps, and how do we blend that then with the higher time frame. I hope this made sense, and I hope you understand. And I think this is the best time for me to do these videos because it's already in my schedule to do a morning analysis. And for the time being, we'll just blend the morning analysis with the new educational content. So you guys will get it each week. I won't necessarily each morning for this week make the video like this, but tomorrow will probably be just another morning analysis. But yes, this is then how we will go forward and so on. So for now, I will put it on Discord. Please don't share this or feel the need to share this with anyone. Keep it in the community, and please ask you nicely. And yes, then on to the next day. Hope you guys have a wonderful day. Stay focused, stay humble, stay disciplined, and stay content. Remember, we need to manage our expectations, we need to manage our exposure, and we need to manage our risk. Those are for me the three important things, psychologically wise. Have a great day, guys. See you in the next one. Bye.